Hello and welcome to NDTV Profit. You're joining us on this special conversation just days after a Japanese financial services giant, Sumitomo Mitsui Banking Corporation, has announced that they will buy 20% stake in Yes Bank. This is stake that is currently owned by State Bank of India and a clutch of other lenders, which SMBC is looking to buy at 21.50 a share. Now, of course, I am here at the Yes Bank house in Mumbai, and I'm joined with Mr. Prashant Kumar, who's talking to us about what SMBC's investment, SMBC's confidence in the Yes Bank franchise would mean for everybody who's watching this, including, of course, a lot of your shareholders who have been waiting with bated breath that something will turn.
I think first, thank you so much for being here and talking about this very, very significant transaction. And this transaction is not only confidence in India from Japanese second largest bank, but also in the soundness of the Indian financial system. And definitely the confidence in the franchise of Yes Bank. Okay. So this also talks about that a overhang for the bank, where the State Bank of India and other banks were holding almost 33% equity, and since lock-in for them was over in March 2020. Okay, so there was always a question in terms of what will happen to their equity holding, how they would be replaced, and how the stability would come into the bank. And I think this transaction has actually clarified that issue, that SMBC is buying out 20% from the State Bank of India, and Japanese banks always have a very long-term strategic role. They have the patient capital. So I think they investing us is also a confidence in the franchise and also gives a stability to the bank, and they would be the largest shareholder for us.
So this pricing of 21 rupees 50 paisa a share, when the deal was announced, it was at a significant premium. But for an investor like SBI and the other banks who in 2020 had at that time entered Yes Bank as part of the reconstruction plan, for them also it's a massive sort of exit. How are you seeing this in terms of, say, valuation, rating for Yes Bank?
No, I think I would like to see in terms of bank continuously delivering on the both business growth as well as on the profitability. It's a continuous upward trend. Okay. And whenever we were speaking to the rating agencies, there were always two questions. The first question in terms of they would like to see a continued path of the profitability, which bank has demonstrated. Okay. Last 4 years, it's a profit. Last year was actually almost double the profit of the last year. Okay. And quarter on quarter, there has been a growth on the profitability. So that part has been addressed. The second question was more in terms of what is going to happen to the shareholding of these banks, how they would be given exit, and actually who are going to replace them.
Correct.
The worry was like if they are replaced by some short-term players like a private equity, then actually the problem is not solved. Okay. But since now they are replaced by a very reputed, the second biggest financial group in the Japan and the 15th largest in the globe, then I think that question is also addressed. So we are quite hopeful that there is an opportunity for the bank for the re-rating of the bank.
Now, let me just talk about this investor. Now, you've had PE investors, private equity investors come in the past, and they bought sizable stake to large private equity players. To your mind, what does patient capital do for the strategic intent of the bank? Because yes, they will be patient with their capital and they will continue to repose faith in the way the bank works. But to your, as a leader of a bank, how important is this for you?
No, I think what is important for us to understand, the private equities, their objectives are different. Okay, normally the private equities, they come for a period of 3 to 5 years, but the objective is always to maximize the returns for their investment. Okay, and when the objective is to maximize the returns, sometimes you don't contribute in terms of investing for the future, right? Yeah. But a strategic player, when they come in, they always would like to see that you need to invest for the future, so that there is a sustained improvement in the business growth and the profitability of the bank. I think this is a very significant difference in the approach of a private equity and a strategic investors like SMBC, which is again because of the objectives for both these funds are there. So I would always like to see that, especially in a financial institution, we need to have the strategic investors. Okay, because sometimes you come with a short-term objective, okay, and you may maximize your returns, but whether you have really contributed to the long-term vision and the stabilization of the bank, I think sometimes there can be doubt around this.
Okay. You've obviously met with the management at SMBC, before this conversation has closed. I mean, it's been going on for about a year, because I remember I reported on it when the original conversations had started. To your mind or to your understanding, what is it that they want to achieve by buying a sizable 20% stake in an Indian franchise?
SMBC, they were interested in the Indian financial market, because if you see the growth of GDP in India, the fastest growing country. Okay. Similarly, the financial system of India is not only stabilized, but doing very well. Okay. Now today, if you see the presence of SMBC in India, they operate through 3 branches, right? Delhi, Mumbai and Chennai. Last year they have opened a branch in the GIFT City also. They also have a 100% subsidiary as a NBFC. Okay. Now this NBFC actually takes care, they have more than 1,000 branches in the NBFC. They take care of mostly the rural and semi-urban area for a very, very small borrower. There are 3 large branches, take care of very large corporates. So their own ambition in terms of having a presence in India in the entire banking spectrum, okay, Yes Bank actually completes that spectrum. Okay. So they have the very large corporates, they have the NBFC going into the rural and semi-urban, but they were not having a bank which takes care of the SMEs, which takes care of the retail deposits, which can take care of the commercial banking, and on top of it, Yes Bank has a very strong transaction banking platform and the digital capabilities. So I think these capabilities and the business segment complete the entire spectrum of a presence as a financial conglomerate in the Indian market.
Now, let me talk a little bit about the meat and potatoes of this investment, right? So you talked about this NBFC. Is there, or have they expressed any interest in merging these 2 entities? That could be one way of increasing their stake in Yes Bank and have a controlling position. But have they expressed anything? Because RBI on its own doesn't allow, say, 2 different lending entities under the same umbrella.
No, I think that I would first answer the second question. RBI doesn't allow a promoter to have more than one entity. Okay, they are coming as a largest shareholder.
Yes,
but they would be the public shareholder. Okay. They would not be promoter. Now, coming to the first part, I think this is a strategic call which SMBC has to take going forward. We are not aware about any such plans.
Okay, fair enough. This 5-year journey since the reconstruction, right? I mean, obviously, I think about year 2 only, most of the issues that were there before 2020 had been resolved. You then entered that one large transaction with an ARC to offload the NPAs off of Yes Bank's portfolio. as the leader of this bank for these 5 years, what have you picked up as probably crucial things that one needs to look out for? Because now that you have a strategic investor, a long-term investor, the focus is all going to be growth, growth, growth. So what does the patience of these 5 years teach you?
No, I think the first was always have a patience, okay? Because if you are taking care of a bank which is in deep trouble, okay, you need to have a patience in terms of first taking some fundamental corrections, okay? Don't go for any kind of aggressive growth. So I think what we have done in terms of correction of some fundamental issues which bank was facing, one was definitely in terms of the asset quality. We started with something like 17% NPAs. Bank has done the largest stress asset deal in the Indian space, which was like 48,000 crore. And if you see the outcome of that has been highly successful. So not only we have been able to redeem more than 2/3 of the security receipts, okay, but we are also getting an upside, okay. And today we are having 100% provision on our residual security receipt. So it means going forward, any recoveries coming from the ARC would be adding to our profit. And today we are having one of the best asset quality in the industry. Our net NPA is 0.3%. Okay. So asset quality has been completely solved. The second issue which bank was facing was definitely in terms of capital. Okay. We were actually below the regulatory requirement. And again in July 2020, bank raised 2 billion through FPO, which was again the largest FPO in the banking industry. Okay. We raised that, and subsequently in December 2020, we raised another 1.1 billion from the two private equities, Advent and Carlyle. Okay. And we continue to have a CET of 13.5%, which is good and sufficient to take care of our growth in the near term. But I think this particular transaction would also give a stability in terms of if there is any capital need going forward, we have a strategic investor who would be willing to contribute in that capital raise. Okay. The another part was in terms of deposits. Okay. Because of all these issues which bank has faced, the deposits have gone down to less than 1 lakh crores. In last 5 years, if you see, our deposit growth is 22% CAGR. Okay. Our CASA ratio has improved by more than 7%. We started with 26, now we are having a 33%. Last 18 months, every bank faced the situation and where cost of deposit for everyone has gone up. For us, last 18 months, cost of deposit has remained the same. So cost of deposit has not gone up. Okay. Bank was facing a very serious challenge in terms of not meeting the priority sector targets. And because of that, we have to keep funds in the RIDF, where the returns are 2 to 3% below the repo rate. Okay. And actually 11% of our assets were sitting in the RIDF, which was a huge drag on the profitability. FY24 and FY25, there is no shortfall in the PSL overall and also in any of the subcategories, right? Actually, last year, we have sold the surplus PSL in the market. Okay. So gradually what is happening, that 11% has already come down to 8.7%, and in next 2 years, it would be less than 5% of our total assets. Okay. So it would also help us in improving our profitability part. Another part, if you see in terms of cost to income, our cost to income was very high. This time the cost to income has come down to 71%. And actually, if you see the Q4, we exited at 67%. So we have a very, very strict control on the cost. Income is growing. We are quite hopeful in next 3 to 5 years, we are working towards bringing the cost to income below 50%. So I think all these efforts are going to help us not only growth, but a profitable growth.
Okay. Now, I want to talk a little bit about the business at Yes Bank right now. So 59% of your advances are in retail and SME. and that proportion has come up significantly over these years. I wanted to get on the ROA and ROE conversation, because wherever your portfolio might be, at the end of the day, those are the figures. You've doubled your ROA between FY24 and FY25, but it still remains sub 1%. What is the journey there? How are you seeing that turnaround for you?
For next 5-year strategy, we are looking for a 1% ROA by FY27.
FY27, okay.
And actually our plan is that when we exit the current financial year, then the fourth quarter, we have a ROA of 1%. Okay. Now this 1% ROA, like what I was sharing, is coming through multiple levers. Okay. One is definitely in terms of how we can continue to reduce our cost of deposit. So last 18 months, we were able to contain the cost, but now we have taken some action in terms of reducing the rate of interest, both on saving as well as on term deposit. Okay. If you see, like 60% is almost retail and the SME. But last financial year, retail asset as such, there was a degrowth, and which was a calibrated move. Okay. The first was, we have moved away from very thin margin business on the retail side. Okay. The second, like we were very cautious in terms of the high risk products, okay, because the entire banking industry has faced a challenge in terms of the unsecured loans. There is a delinquency. So I think last year it was a degrowth, which was a very, very conscious call. But this year we would be looking for a growth on the retail side also by 10%. Large corporate is doing very well. They are growing 10 to 12%. SME and commercial banking, they are continuously growing more than 20%. So I think our target is in terms of large corporate would grow around 10 to 12%. SME and commercial banking would be growing more than 20%. And retail would also grow around 10%. So overall, our loan growth would be between 12 to 15%. And our deposit growth would be always a little higher than the loan growth, so that we maintain a comfortable credit deposit ratio. I think with this kind of thing, not only there is a profitable growth, but there is a very well distribution of risk across the different asset classes. So if you see, like in our bank, there is not a single product or a business where there is a concentration of risk. So risk has been very well diversified, and I think we are quite confident that with this strategy, we would continue to march towards the profitable growth.
Okay. Coming to the riskier side of the business, right, which is the unsecured retail. Now, you've kept it under control. You've said that you've actively degrown these businesses, but when it comes to margin, they play a significant role in that they boost margin, bring in risk, but boost margin as well. How do you balance the two?
No, I think what we need to see is there is a spectrum of the risk. There are products where the risk is very low, but the return is also very low. There is another class of product where risk is very high, returns are also very high, but then those returns may be used towards the credit cost. I think we would not like to go to that other extreme. We would like to go where the returns are moderated, not very high. Because there are always credit cycles where the very risky assets, you always face a problem in 3-5 years kind of thing. So our strategy is not to go for those kind of high risk products.
Okay. In terms of the current business environment that exists, I was reading a report, this is a survey by the Reserve Bank of India, which suggested that private capex is not sharply picking up. In fact, the confidence for private investors is not still very high. We have seen that happen now, and the government has had to do the heavy lifting over the last 2 years or so, 2 or 3 years, since post-COVID. As a lender in this ecosystem, because private capital is not just about corporate loan growth, it's also about wages, which will result in retail loan growth for lenders like you, or SME growth, because they depend on larger businesses. What is your outlook looking like?
So one part in terms of definitely there is a very good support from the government in terms of infrastructure. Okay. though it's correct, like most of the capex is coming from government, but I think we are also seeing that capex in the private space is also happening. Okay. That is one part. Second, if you see in terms of our GDP growth, okay, this is not only because of the large investment, but this is also because of the services sector, okay, which impacts the retail. There has been a very good support to the SMEs. Okay. Like you take the example of the PLIs. Okay. I think this is a scheme from Government of India in terms of supporting these kind of industry is also helping us for the growth of the SMEs and the entire service sector, okay, which definitely have a positive impact on the retail side. So I think overall, we are quite bullish, I would be saying, in terms of the future potential. Market size is very large. Demography of the country is favorable. Okay, there are huge aspirations from the youth. So I think all these factors combined together, we are quite hopeful in terms of a reasonable growth going forward. And if there is a private capex, that would be actually adding to this overall wonderful story.
Okay. Okay. Talking about Yes Bank's current positioning in the market, you are largely a retail SME-led bank. You also have a very prominent transaction banking services offering, which Yes Bank has been known for a very long time. Considering that you talked about SMBC's Gift City branch, which Yes Bank also has one. Do you think that the idea is, because they give you access to the larger corporates now, do you think the idea is competition amongst its India presence and Yes Bank, or is there a more complementary role that
no, I think it's more of a complementary, because if you see, they are in a much better position to lend to the large corporates, okay? But servicing those customers, those large corporate, cannot happen through their India operation.
Yeah.
And since we are very strong not only in transaction banking, we are also very good in terms of offering the digital solutions to our corporates. So I think the corporates who are getting funding from SMBCs, if they can be serviced through the Yes Bank network, this is a complementary. Absolutely, there is no competition around this.
I got a last couple of questions for you. I wanted to get a sense about the feeling within the board, because now you're going to induct 2 new members from a foreign institution. What are you looking forward to in terms of, say, strategic input or some other kind of support that these new directors are going to bring in, and how will that support let's say, the next 5 to 10 years?
No, I think since SMBC has a global presence, I think they are situated in more than 56 countries. Very well experienced. So I think their nominee director would definitely add value in terms of shaping the vision and the future of the bank. Okay. So we look forward in terms of their nominee director joining the board and give their strategic inputs, which I think would be very, very value creative for us.
I also saw that they have these preemptive rights to maintain the stake in case of future fundraisers. You said CET1 ratio of 13.5% right now for Yes Bank. Will you need more capital? And is there, I mean, I know you can't think about it right now because right now this transition is underway. But will that be part of the discussions in the near future?
No, but definitely, like having a preemptive right, it means there is a confidence, okay? And there is also a commitment that whenever there would be a capital requirement for the bank, they would be willing to participate in this. So I think that also gives a lot of stability and the confidence to the rating agencies also.
Okay. We had one rating agency already come in yesterday, Moody's, which talked about this being a credit positive, even though they've not changed the rating on the bank yet. And you spoke about re-rating coming soon. You're looking to close this transaction in about 6 months or so, I would assume. Yeah. So is that re-rating then coming post the closure of this transaction, pre?
I think that is what the rating agencies would decide, yeah.
I want to close this conversation with a question I asked you pre-interview, which was this view that you have in your office of this of the Mumbai airport where planes are taking off right in front of your desk. I wanted to. Do you have a plan to keep seeing this for the next 3 years, or do you want to maybe say, okay, I've done my job, I've gotten a strong investor on board?
No, I think this view when thousands of flights are taking off, okay, actually resonates with the vision of Yes Bank, always flying high. So I think that I would stop at there.
All right, Mr. Kumar, thank you so much for joining us on this conversation, sir. As always, pleasure talking to you.
Thank you so much.